All right. So we have started recording. Okay, so some people attempted the assignments that I gave yesterday. I know not everybody like finished the class with us. People were tired yesterday, and I totally understand. It's quite hard combining work with I can. I get that, right? But I think just four people attempted the assignment, and I've not seen anyone that got it right. Actually, uh, um, they keep making simple mistake like basis period, or some people are confused whether to use old rule or new rule, and they're mixing things up. So, nonetheless, we are going to do that question now. I don't know if anyone has access to the material and was able to attempt other questions apart from the question that I sent to the chat box yesterday. Did anyone do that? Was anyone able to attempt other question? I guess that's a no.
No on my end.
You said,
Said no on my end.
all right. Thank you for answering that. No problem. Let's see what we can do today. So yeah, we're supposed to do capital allowance today. Well, we are still going to start capital allowance at least, but let us just solve that question and probably the next question also. We have four questions here. You can just pay for the material, then you have access to everything. So I'll do number one. And I'll do number three. Number three might look complex to you and is a practical example of changing accounting dates, which I believe, let me see. Number three is okay, number four is cessation. Maybe we'll do one, three, and four so that you guys would practice when you have access to the material. So there are other questions regarding this in our CIT material when we get there, shall we? When we get there. Okay. So I don't think I talked about this provision of finance at 2019. So let's just quickly glance through it. So finance at 2019 introduced significant changes from 2020 assessment year, impacting the tax implications for business sold or transferred among related companies. So when we talk about related companies, they are, for example, parent and subsidiary. When a particular company is a subsidiary to another company or parent to another company, it can also be in form of associates, right? So that's more or less related company. I guess you'd already talk about that in your FR. So now, the provisions that the Finance Act 2019 brought forth are the things we want to explain. So number one is the exemption from commencement and cessation rule. So it means that if a particular business wants to restructure among their related party, so let's say the parents want to do something with the subsidiary or the associate company, even though they might have to cease the business of the associate or subsidiary and join together with the parent company. The associate truly might have ceased business, right? But because on norms they are related from the beginning, so cessation will not apply to the associate. So in a simple sentence, commencement and cessation rule does not apply to business restructuring. When you want to restructure business, let's say you have like five lines of businesses, you want to stop one, you want to start another one, it's still the same company that owns everything. So cessation and commencement will not apply to those line of businesses, right? That's one. Number two, so I qualify for this exemption. Related companies must have been related for at least 1 year prior to the restructuring. So it means that if you don't want to if you don't want to take this commencement and cessation rule, the related company must have been, let's say, associates or partners or subsidiaries and parents for at least 1 year. So now, restriction on asset disposal. Like when you sell your asset to, what are the restrictions? There must be no disposal of assets post restructuring after 1 year. This is one of the conditions to qualify for the exemption. So it means that after you have restructured, you're not going to be selling your asset for at least 1 year. So if you now sell your assets, the exemption is withdrawn. It means that the company is actually going to be considered for commencement and cessation. Then tax exemption on asset transfer. No VAT, no CGT will apply on disposal of assets among related parties during a business restructuring. So you know when you sell your assets, you have to pay capital gain tax. We're still going to talk about CGT by God's grace. We're going to talk about VAT. So probably when we get there, you understand it better. This one is just Ayaba. It's not something so related. I saw it in the past, so I just decided to throw it in so that we'll discuss it. So now let's move to the bone of contention, Olowe Limited, right? Olowe Limited was incorporated in December 2020, commenced business in October 1st, 2021. So, yeah, I already explained to you guys before that there's a difference between incorporating a company and commencing the business for the company. And what we are supposed to consider is the commencement date and not the date that the company was incorporated. And I'm very, very glad that everybody that did the assignment did not consider the incorporation date. Thank you for that. That means you listened and you understand what I taught yesterday. So that's just on a side note. So they commenced business October 1st, 2019. The first set of financial statements prepared by the company covered a period of 15 months, that is October 1, 2019 to December 31st, 2020, and the adjusted profit was 4 million naira. You are required ascertain the relevant basis period and assessing profit for the relevant assessment years. So now, well, sorry, multi jump. Sorry, I was reading another thing. Allowance Limited was incorporated December 2020, commenced business on October 1, 2021. First set of financial statement prepared by the company covers 15 months, October 21st to December 31st, 2022. The adjusted profit was 5.2 million. So you're required to, I think the questions are similar. Sef. So now, let's go to our Excel workbook. I think what confused most people in this assignment is the fact that they did not explicitly talk about the what's it called? They did not explicitly talk about the accounting year end. I think that is the major problem everybody had, everybody that attempted the assignment. But they actually said it in the question. You guys just like grabs it. It was codedly presented in the question, but I guess nobody grasped the fact that the accounting year end was mentioned. So now let's talk about Olowe. Don't fall down. Olowe, I think limited, right? I'm not sure. So commenced business when Olowe commenced business
1st October, 1st October
obviously.
2020.
Thank you. October 1st. Which year? 2020, right? Now, financial
2021.
statements.
2021.
2021.
2021.
2021.
Oh, sorry. Thank you. I thought it was 2020. So, the financial statement that was presented, the one that gave us the profit, covers 15 months. And the 15 months is what? October 2021
The
to
same year.
December 2020 what? 2, right? Now, this particular period is what? 15 months. And they were nice enough to tell you in the question that the period is 15 months. In fact, that means they are being very nice, because on norms, they're not supposed to tell you. You ought to calculate the number of months in that particular financial statement by yourself. Since the word period has been used, they did not use the word year. Year means it's 12 months. The moment you see the word period, it means that there's something wrong with the 12 months. It's more or less than 12 months, right? But they were nice enough to tell you that the period covers 15 months, right? So this is very important. We know 15 months. So now let's go back to the accounting year end. If you look at the financial statement, when did it end? December 2022. It means that the what? Accounting year end is nothing but December every year. December every year. So the reason why this company now did 15 months is probably because they felt like, why would we do 3 months financial statement when we can do 15 months period financial statement? Do you get? So that's just basically it. Now we are using new rule. New rule. So we are going by, let's start from here. Year of assessment, basis, period, think accessible profit. Yeah. So let's make this like this. Okay. Now, using our new rule, profit for year one says what? Profit from the date of commencement to the end of the first accounting period. The end of the first accounting period. So now the first accounting period is going to be when? When would be the first accounting period? We know that they started October 1, 2021, right? To when is the first accounting period? Can anybody tell me when the first accounting period is?
31st.
That's December
December
31st,
That's
Which
2022.
that
year?
sound
2022.
Which year would
20,
that be?
2021.
2021 is as simple. I don't think anybody got this part. It's as simple as that. And yeah, I think a guy got it. It was the second year that he missed. So October 1st, 2021 to what?
That was
31st.
me. That was me.
I know somebody got it, but the second year he messed up the second year. That December 31st, 2021. So that is the basic period. And now, what will be the year of assessment?
2022.
2022. Thank you.
Eh,
Now, the total profit is, let me check. The profit is what? 5.2 million. Total profit. Total profit is how much? 5.2 million. I'm sorry for the background noise. It's my baby that is playing around, please.
No
Let me.
problem.
Okay. Okay. So now, to now know the accessible profit, let me. I don't want this thing to mumble up ahead each other.
Please, I want to ask a question. Are we using we are using new rule?
Yes.
So why are we still counting from October to December? I thought the basis period is supposed to be from October till that is November, abi? 31st instead of December.
Okay. So
I don't
this
know.
is it.
Yeah.
The rule says from the date of commencement to the first accounting year end, right? For new rule now. First accounting year end. It does not matter what month, it has to be the first accounting year end. And we have established the fact that this company's year end is December every year. From their financial statements, the dates that they end, the months that they end this financial statement indicates their year end, which is December. December every year is their financial year. So it means that if they have started their business in October 2021, the first financial year end is supposed to be what? 31st December 2021. And the profit for this basis period is going to be paid in what? 2022. I hope we are good.
Yes.
So
Thank
now,
you.
how many months is this? We have October, November, and December. That's 3 months, right? It means we are going to what? Prorate this figure. This is the entire profit for the 15 months. So to prorate, what do we do? Equals to 3 months divided by what? 15 months multiplied by our total profits. And that's, I think I saw like 5 people, I say five, like 3 people that got this figure. So if you got this figure and your base period is correct, and you have a certain to correct, you can clap for yourself. That's for year one. Now for year two, the rule says from the second day after the end of the first accounting period to the next accounting year end, right? So now, second day after December 31st, 2021 will be what? That will be January, right? So we have January 1, 2022 to December 31st,
Sorry, ma, please.
20.
I'm sorry. I didn't get the accessible profits for the first year. Sorry.
Yeah.
You can use the
So
calculator.
is it you don't get how I got this particular amount?
Yes, ma'am.
Yeah.
Sorry, I'm just joining your class today, so I didn't get. Yes, I didn't get the first part, please.
If you are just
Just the
joining,
accessible
I
profits.
can't really help you much, but I will explain this place because we discussed this yesterday, and this is just like a sample question to what we did yesterday. So you might want to go and check the YouTube link for yesterday's class. But let me just try to explain that one. So now we are talking about commencement of a new business and how to um know the acceptable profit of a new business that you are going to charge to tax. So now the rule says in the first year of assessment, we are going to calculate the profit from the date of commencement to the end of the first accounting period. So this particular question, we have broken it down. This is it. We have broken it down. The business commenced in October 2021. The financial statement covers 15 months, which is this. The financial statement covers 15 months, which is this, right? The accounting year in December every year, and the total profit of the 15 months is 5.2 million. So now, following the first year, the rule for the first year, we are talking about the commencement date to the first accounting year end. The first one, not the second accounting year, but the first accounting year end. So they commence 2021 October. It means their first accounting year end will still be that 2021 December. 2021 December. So because this particular profit is a 15-month profit, right? We need to remove these 3 months profit from the 15 months profit, which is what we did here by doing 3 over 15 multiplied by what? 5.2 million. I hope we are clear. And of course, we are going to be doing preceding year basis. Tax of this year is going to be paid next year. Like you want to tax the profit of last year this year, profit of this year next year. That's how preceding year basis works. I guess I've done justice in like trying to go back to what we've done yesterday. So now the base period for this second year is now going to be what? 2023, because of course it's preceding year basis. Now, how do we get the profits from for this year? It's simple. It's either we minus this 1.40 million from this, or we just do our 12 over 15. So we have 12 months. This is of course a whole 12 months divided by 15 months profit multiplied by what? 5.2 million. Do we get it? We could have done the third year, but we did not have information for the third year's profits, which is why we have to stop here. Please, are we good? Are we good?
Yes, we
Thank you, Afolabi.
Yes, ma'am.
All
Thank
right.
you.
So let's move. I get everyone that made a mistake. I've seen what I talked about too. I think everybody should be able to correct their mistakes now. Copy stop. You want to break it. So let's move to the question 3. Let's move to question 3, please. So Fi Limited for many years. Yeah.
Have we done like this?
Yes. This is the answer to your question. This is your answer.
We are not
It's
going to
as if
apply the old rule.
well, when we are not told to use the old rule, and the year of assessment did not cover the old rule. Or do you want me to use the old rule?
Ma, please,
Ma,
yes.
you can do it now, please.
Yes, ma, please.
Okay, I will use it, but please, going forward, we are
Yes,
most likely going to ignore the old rule because that's not what we want to focus on. No problem. So let's go through the old rule then. Old rule. So now, the law for the old rule says what? The first year of assessment. Let me copy this. So okay. So it says, why are you putting your leg inside the water? Oh my God. It says the first year of assessment, date of commencement to the end of that particular let me write 1st October. 1st October 2021 to the end of the year, which gave us the same as the new rule itself actually. 2021, which means that the accessible profit is going to be the same thing. Abi? Now, for old rule, second rule says from the date of commencement to 12 calendar months. Date of commencement to 12 calendar months. So like we did yesterday, let us list our month out. We have January, February, March, April, May, June, July, August, September, October, November, December. So now, this business started when? October, right? I've already given you the app. So, but, come on. But for those that were not in class yesterday, the act is that if a business should finish in October, definitely the business started the month after, November. If a business should finish in July, the business started August. That's like, we're talking about the 12 months too. So a business that use 12 months, like a 12 calendar months now. But just to be sure, let's count. How do you now count? You count backwards. From October, count backward. So we have October, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Then you go back to what? December, 11, 12. This is what? Our 12th month. It means that our 12th calendar month will stop when? November. So using the old rule, we have 1st October 2021 to, I think November, is it at 1st or 30? I don't even know. 30 November 2022. So now we are talking about a whole calendar year, like a 12 month. So it's probably going to be the same thing as what? This 12 month too. Do you get? So now, for the 3rd year of assessment, say we are going to be following preceding year basis, PYB. So to do PYB, you follow this accounting year. December every year is accounting year, which means this thing will end December. It will end 31st December 2022. Why 2022? Because it's PYB. This 2023 must not show your basic period when we are doing PYB. It has to be the year before. Do you get? So if it stop December 2022, when will it start? It's going to be what? 1st January 2022. Do we have the profit here? Yes. How much is it? It's still the same figure. Please, are we good? Do we understand it?
No, ma'am.
Eh?
That means
No.
you.
The
is the same
second
thing.
year, 2022 should be October to September, 12 months, 12 calendar months, ma.
Yes.
12
September.
calendar months.
Which one?
The second year, that 2022 year of assessment.
It should be
1st October to 30th September, ma'am.
Oh, that's true. Sorry.
Yes, ma'am.
They started October, so they will end the month before. But how come we counted? Oh, sorry. I counted backwards instead of forward. I'm sorry. Sorry.
All right.
Thank
It's okay,
you
ma'am.
thank you for bringing that to my notes. So September
welcome,
is
ma'am.
09. Yes, you are right. But it's still the same figure because it's 12 months.
But, ma'am, sorry.
Okay.
I feel like going to remove. We are going to remove from the first this January 2022. Remove the date, the amount there. Then we are going to remove from 31st of December 2022 the amount. Then we add it together to give us the amount for 2022.
I don't understand what you are trying to say. This is it for this 2023 year of assessment. Everything is still inside this 15 months. Do you know? That's why the old rule was abandoned. We have taxed like some months, like 2 times now. This January to December 2022 is still inside this money. Do you know that? October to September is still inside this money. October to December is still inside this money. Everything is inside this money. I don't know if you get it.
Excuse me, ma.
That would be
Sally,
like double taxation.
eh?
That would be like
Okay, ma.
the company is paying double, man.
Exactly. That's why the new rule was established and we had to abandon the old rule.
So ICANN will not ask us to use the old rule.
No, most probably you are not. In fact, we started using new rule in my set. That was 20. I wrote skills May 2022, and it was our set that they started asking this new rule. I remember that I found it very difficult to adopt the new rule because I was used to the old rule, you know. But then, since then I don't think they've asked old rule in tax. I don't think so.
Okay,
So,
ma. Thank you.
Sally, you want to say something before what is it now? Do you want to say something? Sally, you can unmute and speak.
No, let's just continue. But I just feel like that first one that we calculated now, I feel like that one is very okay, it's well understandable. But this old rule, I did not still get it very, very. I'm just feeling like it's not correct.
The old rule is actually correct. That's how we used to do it. In fact, I did old rule in NG and I also did it in, I think, we did use old rule when I was in, is it not 200 level? I'm not really sure. But then that's how old rule is. That's just how old rule is actually. So if you are
Fine,
good, we can move to number 3, change in accounting date. I don't think we did a valid. I don't think we did a valid example yesterday. Sorry, give me a copy.
What about number 2?
What about what?
Part 2. You said we're going to do 1, 2, 3.
Sorry, I was speaking and I muted myself. 2 is the same thing as 1 now. It's similar. You just try that number 2 yourself. Go and get your material and try yourself. I would like you guys to be try these things. You know, there are some of the examples that is inside the material that we don't do yesterday too. So you can do that in your leisure time. You can come to my DM and ask if you are correct or not. I'll probably respond to you. All right, sorry for that. So let's go to question 2. Where is the material? Okay. So question 3, sorry. Firefly Limited for many years prepared account to December 31st, but in 2022 decided to prepare a 16-month account to April 30. The adjusted profits are as follows. We have 12 months to December, 12 months to December, 16 months to April, 12 months to December. Compute the accessible profit for the relevant years of assessment. First of all, you should know that this is a change in accounting date. And remember that change in accounting date has rules, right? It has rules. So let's go. This change in accounting date. Change in accounting date. Yeah. So let's go by the rules one after the other. It says number 1, you have to identify your year of permanent change. Identify your year of permanent change. So in this question, guys, I want you guys to tell me What is the year of permanent change? I told you that the year of permanent change is the year that the business fails to use their normal accounting year end. The year that they fail to use their normal accounting year end is the year of permanent change. So in these questions, in this quiz, I'm still showing the question because I want you guys to look at it very well. In this question, what is the year of permanent change?
2023.
April
Eh?
23.
2023.
Okay.
The year of permanent change 2023.
Okay.
It's 2020.
Sally, what did you say?
It's 2022.
Okay.
It's 2020.
Sally, why I can't hear you. Wow. You said 2020 what?
2022, man.
So you and Wilfred said 2022. Others are 2023. Who else is joining Awa and Wilfred? Awa is laughing. Don't worry, you're not in trouble. My baby is telling you to be courageous. There's nothing. All right. So the thing is that only Wilfred and Awa got it. They are the one that got it. 2023 is wrong. So let's go back to the question and explain better. That's why I want us to read this number 3. If not, you're supposed to go and try it by yourself. In fact, I was supposed to give you 2 years assignment, but most of you have not gotten your material, so you don't have this. You don't have it. Please, going forward, Ejo, pay. Because as soon as we finish the class, I'll drop the material to the drive so you can have access to it. Won't have to. You guys can. It's easy when you try it by yourself. Then I come and correct you. Even you remember it faster because you remember that you made this mistake and it was corrected. Than if I just saw it for you straight away. You said
you didn't drop the YouTube.
the YouTube has been dropped now. Did you not see it on the group?
Okay, I didn't see you. Maybe I'll check again.
It has been dropped since yesterday. Was it yesterday or this morning? I saw it today, Sha.
Okay, ma. Thank you.
All right. So yes, as I was saying, only Awa and Wilfred got it right. I said the year of permanent change is the year that the company failed to use their normal accounting year end. Now, sorry. Sorry. So look at the years as they lined up. 2022 we have December. Sorry, 2020 we have December. 2021 we have December. They omitted 2022 and moved to 2023 April. So what happened to 2022? Besides, in this question, they have made it so simple for you that they mentioned it here. See, I intentionally did not say anything about it when I was reading it because I know if I say it, you guys will catch up. See that place. See it. Let me give it yellow. That place that I highlighted yellow, they already told you. It's just that most people did not pick it. They told you the year that they decided to change. So on months, they are supposed to do 12 months to December 2022. But because they have no intention to stop at December, they move it forward towards April. So the year of permanent change in this question is 2022, not 2023. Please, are we good? If I see more questions on this thing, I will send it your way. Okay. Though I think I have a question in CIT. I have a question in CIT. But then I'd like you to treat more questions on it, just so you guys will get it better. I'll try to. The class rep, what happened now? Is the guy not joining class? Is it not in this place that I have class rep? Abi, I have class rep in your class now, don't I?
I don't think so.
Yes.
Ibrahim.
Yeah, I think it's Mustafa.
Ibrahim Adelti.
Hello, ma.
It's not your class.
I'm your class now.
Are you the class rep?
No,
But I cannot remember the guy's name. I know he's a Muslim.
I wanted
Muhammad
to
or
ask
something. I'm
questions.
not sure.
I wanted to ask questions. That's it.
Ibrahim, I can hear you can speak.
Yes. Please, bring up that question back, sir. Ma. Bring up the question back. Let the question display, ma. That question, please. Let it display. I want to ask question about it, ma. Sorry, ma.
All right. Okay. This one.
Oh, okay, ma. Yes. can we say that because you said that the year of permanent change
I
is
can hardly
2020?
hear you actually.
Hello, ma. Can you
Oh
hear me
yeah,
now?
you can ask your question. I've displayed the question.
Okay, ma. You said that in the changes of accounting date that we have to identify the year of
Oh yeah,
permanent
ask
change.
your question. Oh,
That's what I'm asking, ma. Hello, ma.
I cannot hear you again. Oh, I don't know if you are talking. I cannot
Well,
hear
he's
you.
speaking.
I'm
Am I the
speaking.
one that has done everything?
I'm speaking, ma.
Yeah, I can hear you.
Hello, yes, ma. Yeah, bring that question back, ma.
Yeah, I can
Sorry,
hear
ma.
you. Speak.
No, I want to see that question now. That question, ma. Yeah, yes, ma. You said that when we are doing about the change of
I can
accounting date,
hear you now. Oh.
okay, ma, that we should identify the year of permanent change, Abi. And you said that the year of permanent change is 2022.
The
Abi,
question
ma.
is there.
Yes, ma. But me, I was not thinking that maybe for more clarification that in this December 31st, 2020, that they wrote 180,000. Maybe the year of adjustment for that one is 2019. Hello, ma. Are you getting me, ma?
See your voice is breaking up. I cannot speak what you are saying. Will you chat in it? Will you type in the
Sorry.
chat box?
What I'm
What
trying to
you
say is
say?
that you said that the year of
Hello.
the year of permanent change.
Sorry.
The class rep
You
is
are
here.
breaking up. I cannot hear you. Would
The
you use
class
the
rep.
Network, ma.
would you use the chat box? See, we are almost using an hour and we have not even gone into today's
Okay,
topic.
sorry, ma. Sorry, ma. Sorry.
Good evening, ma.
Good evening.
The class rep is here. I was sick, that's why.
Oh, class rep. I was like,
Ma,
I gave you an assignment to do. Oh. Please, I'm
I,
coming.
I was sick. Idan baba da ya tura.
Tana waje?
I think her network is bad. She should log out and log in back. How are we going to do it like this?
The network is bad.
I don't know whether we should all leave the class and we join back again.
We can hear you now, ma. We can hear you now.
Can you hear
Her
me
network.
now? Sorry.
We
Can you
can hear
guys
you
hear
now.
me?
Yes, we can
Thank
hear
you.
you.
We can
Sorry,
hear you, ma.
I had to pick my dad's call. He called me, so I had to pick up. I'm really sorry. So somebody was trying to ask a question, but I did not get him. Everything was breaking up. I could not hear him. So if you can type the question, I would really like that. I could not hear you at all. I know you were asking about something about the year or something, but I did not get. Then the class rep, I think, is it Mustafa that I saw that was speaking when I asked about the class rep? Sorry, I hope you are feeling better. I would
Yes,
need your help in collecting question. Mustafa, hey, I know your name starts with M, but I could not really remember whether it's Muhammad or something.
okay.
Sorry, and I'm really sorry for not asking of you because normally I'm supposed to have asked about you on the group or something like that. Sorry for that.
No
So
problem.
I hope you've catch up with yesterday's class. Or were you in
Yes.
yesterday's class? I think so.
No, ma, I was not in yesterday's class.
All right. So please you watch the YouTube video so you can get what we are talking about. So because this topic is very, very important. That's why I would need you to collate questions. you can check the past question and help me collate like at least 4 to 5 questions
Okay, man.
on commencement, change in accounting date, and cessation. So maybe at least one question each, at least, or at most two questions each. Then you send it to my DM. I'll collect it in a file, then probably put it in the drive. Okay.
Okay.
So because I want all of us to get this thing, it's very important that we get this period. It's very, very important that we get it.
Okay.
All right. Thank you very much. So let's move on. Okay, please everybody mute your mic. Let's continue with our class.
Sorry, ma, please, can I say something?
Oh yeah, please go on.
Sorry, ma, for interrupting you. Please, that first question that we solved, I'm sorry. That is there from 1st of October 2022. I'm thinking that we are going to take 3 months, which is then from October, if you count from October to 2021. That's 3 months, ma. That we are going to do 3/12. Then plus
for which one? For this one.
From that yes,
that now.
That yes, that one that you are putting your cursor, that October 1, 2021.
Okay.
So from October 1, 2021, that's 3 months. That's 3/12. Plus from what's it called? November to December 2022. We count the remaining months over 15. Then we add it together. I think that's what is going to be our figure.
All right. Can you repeat you said we should count from what? Let me write it out.
Okay, I'm saying that from 1st of October 2021, that's 3 months, right?
To what? To what date? To what date?
1st of October to 31st of December 2021.
Okay. And we are going to add which one?
Months. That's 3 months, man.
Okay.
Then plus from November 30th has already ended. That means we have only 1 month left, which is December. We are going to use that.
Where did you see November?
I thought you wrote November. Okay, September 30th, 2022. Then since September has already ended, the next month is October. So from that October to 31st of December, that's 6 months.
I don't understand you. You are confusing me. You said October 2021 to December 2021, 3 months. I agree with you. But then why are you starting from October again? I don't really understand your second analysis.
Sorry, ma. You said from 1st of October 2021. That's 3 months, right? Then you now write to 30th of September 2022.
Yes.
Since September is already finished, the next month is October. So from that October to 31st of December is another month that we are going to remove. Then we add the amount that we get together.
Remove from where?
Don't worry, ma.
Hello, ma. Hello, ma.
Yeah, I can hear you.
Hello, ma. Let me talk, ma. What, ma? And thank you for the clarification, ma. What is trying to say is that based on what you gave us, that the money here is 5,200,000 naira. Abi?
Yes.
Based on the Allowance, yes. And we all know that all the computation accessible profit, if you add them up, it must not more than 5,200,000. I don't think that maybe I'm speaking your mind, Abi. Abi, ma.
Yeah, I can hear you.
Hello, ma. The second year of assessment.
Can I speak?
Wait, let me talk now. Sorry, ma.
Let him finish.
Yeah, the second year of assessment starts from 1st October 2021 to 30th of September 2022, which is 12 months. Abi?
Yes.
What is trying to say that we should protect it maybe 12 over 15 times this 5,200,000 because we are taking that money from that 5,200,000 naira.
But
That is
that's
what
what
he's
you
trying to
did
say.
here now.
It has been
That is
prorated
what he's trying
already.
to say. Yes.
No, I think she's talking about 2021. That since
Just
we have
21 now.
counted 2022 to September, that 2023 should start from 1st of October. I think that's what she's trying to say. That the last one
So
should be 3 months.
I think what she's trying to explain is you said we have old rule and new rule. Though I was not in yesterday's class, but according to what she was saying, she was like, since you already have 3 months in the first one, that 2021, then you are now moving to 2022, that you're supposed to have that 3 months. Do you get ma? Then since this October 1st, 2021, it's already in the first year, which is this 2021, that's already calculated there already. So we'll now do 3 all over 12. Then the remaining 9 months, which is January to September, that is 9 months. We'll now do 9 over 15. I think that's what she's saying.
Yes, that is what I expect her to say. That's why I'm listening, like that's why I'm intentionally being patient, and I want to listen to her to complete what she's saying before I respond to that question. But she lost me when she started mentioning November, and I did not get what she's trying to say again. Can the lady confirm if that is what you are trying to say? Because the last lady actually talked about
That's what I'm trying.
That's what we are trying to say. Okay. If that's what you are trying to say, you are not wrong. You are not wrong. That's why I'm saying ask your question. Don't be scared. I cannot do anything to you. So you are not wrong. So you are saying that there's 3 months, October to December. Then there's 9 months. That is January 2022 to September 2022. Am I right? Oh yeah, let's do it together. Is he going to give us the same answer? But let's do it. So this one is that we have what? 3 over what? 15 multiplied by our 5.2 million. Am I right? 3 months. Abi? Our remaining 9 months equals to 9 over 15 multiplied by our 5.2. Abi? Now, it's as simple as summing the two together. What did he give us? It's the same answer. So rather than stress yourself and be dividing it to 3 and 9 months, you can easily just pick 12 over 15, which is what we did here. 12 over 15 multiplied by 5.2, you get the same answer. The only reason why you would do it this way that you have done it is if this company had given us a period to in the question, not answer. In the question, if the question says period to December 31st, 2021, this amount, then year to December 31st, 2022, another amount, then you now read the way we just said. 3 months, then you add what? 9 over 12 multiplied by the amount of that 1 year. You add it together to get your year 2. I don't know if you get what I'm trying to say. Are we all good? Thank you, Faith. Thank you, Wilfred. So it's still the same thing. What I will tell you is that try to understand it, and regardless of another person's method, the most important thing is that you get the same answer. Sometimes your method or your own way of getting the answer might be longer, but as long as you know what you are doing, that is the most important thing. You have to know what you are doing. If it will give you a different answer, you are just stressing yourself. But as long as the answer is going to be the same, just do it the way you understand it. It might look like why is this person long things. If that is what you will make you get the correct answer, long it. Nobody will hold you responsible for anything. As long as you get the answer, you can manage your time. The time will be okay for you. So like you long things and then you end up not even finishing your work. Not that kind of long things that I'm talking about. But ensure that you understand and know what you're doing. Then you are good to go. Okay. So that is also correct. It's just that to take time, but you get the same answer. All right. So Ibrahim, your hand is up again.
Sorry, ma. Please, ma. If you sum those 3 assessments together, the answer that we are getting is more than the 200,000.
And now it's going to be more than it now. That's one of the disadvantage of the whole rule. That's why we were told to abandon old rule and do new rule. So we are definitely going to get more than that. The old rule has gaps and overlapping, and I already defined what gap and overlapping is yesterday. Sorry, I already defined it yesterday in yesterday's class, and I explained why we had to abandon the old rule and adopt the new rule. If you check the new rule now, there is no overlapping and there is no gap. What we have is the amount that we have here. If you add it together, is equals to what? The total profit. Is equals to the total profit. Do you get? But for this one, our 5.2 million, they have taxed the life of the 5.2 million. See, they have taxed it. 5.2 million lere. Wow, see what they taxed. See, they taxed. Did we even earn the 9.3 that they taxed? No, we did not earn it. They are just taxing us more than once, which is why we had to abandon the old rule and what adopt the new. Anita, your hand is up.
Yes, ma'am. Please, I want to know. You said something in the new rule that the basis period year must not be the same thing in the year of assessment. I want to know whether it's also applicable in the old rule or it's just for the new rule.
It's only applicable for year 3. It's only applicable for year 3 in the old rule.
Okay.
No, year 3 in the old rule is what? Preceding year basis. Year 3 is preceding year basis. So it's only applicable for year 3 in the old rule because that's the only thing that follows preceding year basis.
Okay, thank you, ma'am.
You're welcome. So now let's move. In fact, we have wasted too much time. 1 hour. Hey, we have not started today's class. Okay. So let me go back to our 5-5. Are we good though?
Yes.
Okay.
Wow.
Change in accounting period. So now, like I said, this question is tricky. Why? It's a bit hard to know your year of permanent change. They intentionally trick you with this 2021 and 2023 that they wrote there. It's a trick. But you have to be the one to know that 2022 is missing. The missing year that they failed to use December 31st is your year of permanent change. Okay? So now, that is rule number 1. We have identified, let me write it out in our Excel sheet. So it's going to be easy for you guys to phrase this calculation. 5-5 limited. And for the context, it's my nickname that is 5-5. I'm the 5-5. So you guys will be seeing a lot of 5-5 in this class. So let me copy this. Okay.
Hello. Good evening, ma'am.
Good evening.
Please, I don't know, maybe is the class being recorded?
The class is being recorded.
Thank you, because I'm engaged in an activity. That was why I said let me just ask. Thank you, ma'am.
It's
So
being
I can
recorded.
follow up later on.
Yeah, exactly. You can do that later. It's being recorded.
Thank you.
Sorry. Okay. So year of permanent change is 2022. We have agreed to that, right? So the second rule says what? Identify 2 years after your year of permanent change. 2 years after. Oh God. After. So there are 2 years after will be what? 2023 and what? 2024. So the next rule says compute using what? Compute using old year, old date, yes, old date. Then compute using new date. Select the higher of the two. So now these 3 dates that we have identified is what will bring here 2022, 2023, 2024. Are we good? So now these remaining 2 things will form part of our what? Workings. Let's copy this. Copy. Let me paste it here. Paste. So yeah, we'll use old date. Oh, what is the old date? Let me put it here so that you guys will not get confused. Old date is what? January to December. New, give me that. New date. Let's go back to the question, please. So the new date is what? April. If the new date should end April, when did it start?
It starts on May.
May.
Yeah.
So May to April. This will help you to get it better. So now we are using old date. Let us write out our year of assessment: 2022, 2023, 2024. We are following normal preceding year basis. So normal PYB and follow normal preceding year basis. So following preceding year basis using the old date. Don't forget, we are using this old date. Old date. Let me bolding old date. Old date using PYB. The basis period for the first year will be what? January. 1st of January 2021 to 31st December 2021. Are we good? Now go back to your question. Do we have the profit? Yes. This is it here. 240,000, right? Come and write it here. 200 and where's my cursor? Sorry, I'm already writing on that thing. I don't know that my cursor was there. So I said, let me write it here. So profit 240,000. Bitibawo. So now the second year is still normal PYB. 1st of January 2022 to 31st December 2022. Now go back to your question. Do we have 2022 December here? No. This is where we have to what? Prorate. How many months is this? 60 months. How many months are we looking for? 12 months. What do we do? Equals to 12 over 16 multiplied by how much is the money? 366,000. 336,123. This thing I'm writing formula because we are using Excel. In your book, you write this thing out. You write it out. I don't know if you guys are getting what I mean by write it out. You write it down and you write is equal to under it. You write out the work.
You mean restricted the workings?
Yes.
Okay,
it's because we're using computer. That's why I'm doing formula.
All right, ma'am.
Yeah. So that's for the 12 months. Then the next one we have 1st of January 2023 to 31st December 2023. How many years? 1 year. What do we have this year? No. We have January to April in this third one, which is 336. And we have from what? May, Abi? Is it May? Yes. May to December in this 144. So now, let the operation begin. Let's go back. Let me try, because now if I do it straight, I can write the formula straight. If I do it straight now, question will kill me today. So let's break it down one by one. From January to April 2023 is where? Is in this 336,000. Is in 336,000. So how many months is January to April? Please, how many months is January to April?
4 months.
4 months. Thank you.
Yes.
So we are looking at 4 months. Now, I want to remove 4 months from 16 months. So what are we going to do? Equals to 4 divided by what? 16. Multiplied by, how much is your entire money? 336.
36,000.
Are we good? So
Yes,
now
ma'am.
this one is what? 4 months. How many months do we have left? We have from May to December, which is what? Is it not 8 months?
8 months.
8 months.
8 months. So now we have May to December 2023. But that one is in which year? Is in this 144. Abi?
Yes.
So now we will now prorate as well. Equals to 8 months divided by, that one is 12 months, not 16 months. Multiplied by 144, 123. Then what do you now do? You add them together. So this figure, 180,000, is what you now bring here. This one equals to this figure. Because if you add this together, that means we have from what? January to December 2023. Please, are we good?
Yes, ma'am.
Yes, ma'am.
Thank you. So add it together and leave it like that. Now, that's this. We have done this step like that, completed. Let's move to this step. Abi? So let's copy this and paste it here. But we are going to edit to new dates. Okay. So now the new date is what? No, we have sent old dates here. This is old date. This is what? New date. New date is what? May to April. Remember, this remains the same. This remains the same. Let me put it down. So now basis period is what will change, right? Our base period will change. This, when is this class supposed to end actually?
Seven. I think 7.
Oh, I think it's 8 or 8:30. I'm not sure. Is it 30 or 8?
6:30.
Oh, 6:30.
Yes.
I was thinking 8 in my head. You guys should. I was thinking 8. We cannot end 6:30. Oh. Better go and carry your gari. Go and carry your gari now and be sipping as you are doing this. You cannot end 6:30. Okay, so let's continue so we can speeding things up. Hey, we have not started today's work at all. Hey. Okay, so new date. We have what? May to April. So just follow through preceding year basis. So that will be May. 1st of May 2020 what? Can somebody guess?
2020.
2020. Thank you. To April, I think it's 30 days. April 30.
2021.
2021.
Yes. So now promotion mark for me by. Let's go and do this one. I don't know how I will link this one, but anybody that checked the material ought to know that. Let me push this here. Because some people, when they open this file, they can get confused as to, so that they can see, But for this one, I don't know. You just have to do it somehow, Sha. Okay. Let's do that one here. If you go back to this place, we have January to December. I have to lie now. January to December 2020. Yeah, this is it here. So, what part of this date can we see in that first one? We can see May to December there, Abi.
Yes.
So let's write May to December 2020. You can see that one. In the next one too, we can see January to April 2021 in these 240,000.
Yes.
So January to April 2021. Now let's prorate. May to December is how many months?
7 months.
8 months.
8 months.
Is it 7 or 8?
8.
Okay.
Eight.
So it means we need 8 months out of these 12 months, 240,000. So equals to yeah, sit down.
8 months.
Equals
Eight,
to
8 over 12.
bracket 8 over 12 multiplied by 240,000.
Okay.
So that's it for May to December. The remaining month is how many months? January to April. 4 months. And
4
where
months.
is it? I wrote 240. It's supposed to be 180,000.
It's 180. 180,000.
It's 180,000. Yeah. I wrote. Okay. So this one is now 4 months out of how many months? 12 months, right?
12 months. 12 years.
Multiply by 240, 1, 2, 3. Then what do? We add it together.
That's 200.
Please, I hope we are not confused.
Yes, ma'am.
No, ma'am. We are not
So it
confused.
means that this one equals to our workings here. Are we good?
Yes,
ma'am.
Thank you. So to the next year now, it's still preceding year basis. Follow the same dates. Just follow the same dates. Just the year that will be changing. We are 1st of May 2021 to
30th of
30 April 2022. Are we good? Do we have this straight away? No. We don't. We have how many months in 2021? 8 months in 2021. And we
8
have
months.
what? 4 months in what?
4 months
In
in
this one.
2020.
Abi? So we prorate again. Come here and prorate again. So we have May to December 2021. Abi?
Yes.
Yes, ma'am.
January to April 2022. So what does this give us? Let me go and check the figure for December 2021. 240 equals to
240.
open bracket 8
Divided by 12.
8 over 12 multiplied by what? 240,000. But for this one equals to
4
over
over 16.
12 multiplied by how much? I don't know.
No, let's check that very well.
This one is not 12, it's 16 months.
Yes.
336. It's
Okay,
16.
4 over 16. Okay.
Yes.
By
Multiplied by
3,
336. 1, 2, 3. So now add it together.
244.
So
244,000.
what happened? I have to like, do you stop that?
Please give my phone.
Sorry, I'm sorry. I'm the one. I'm really sorry for that. So now this one equals to this one. Please, are we good? Now, the following one to be the same thing. So now, if you come here, this old 12 month is in this place. Is in this place. I don't know why this one is highlighting nonsense. The old 12 month is in this 336. May to April 2023 is here. Please, do you know why? It's 16 months. If you remove the 4 months that is here, the 4 months that is here, it will remain what?
Remain 12 months.
It will remain 12 months, which is the 12 months that is what? That remains in that 16 months. So just come here straight. Equals to 12 over 16 multiplied by 1, 2, 3. Enter. Right? Let me do this one. It's not look strange. So what do we do straight? Add it up. So now, which one is higher of the two? Is that not the last
New date.
rule?
Yeah,
The
yes,
new
that's right.
date.
New
New
date.
date is higher of two,
The
which
new
means
date.
that your answer in the answer sheet, in the answer gangan, is the what? New
New date.
date.
Okay.
Thank you, ma'am.
Why is this one copying nonsense? Okay. Sorry. Supposed to lock it too. Okay. I think we should be able to copy now. Okay. So that's it. So all of these ones that we have written here, everything that is there, you go under your working notes. You like leave space. You know that I can book is plenty now. You can even ask for more. So don't have them to manage their space. To leave it so that your work will be neat and fine. So you leave like, let's say, half a page. No, this one is not plenty now. Half a page. Then you now start your workings. Whichever that is now the higher of the two is what you go and write in the original answer space. Please, do we get it?
Yes, ma'am.
All right. I guess we are good to go like that. We are good to go now.
Yes, we are
Okay.
good to go.
So, without further ado, Oleku Nigeria Limited was incorporated in 1990, ceased operation on March 31st, 2020. Having been in business for over 25 years, accounting year end is 31st December annually. Determine relevant date of assessment and due date of payment. This is a cessation question. No, remember the cessation have Odu and Nubu to like commencement. But my ladies and gentlemen, cessation is the most simple part of these three. If you guys understand yesterday's cessation, I know most of you were already sleeping, you were tired. You were tired and sleepy already yesterday, I understand. But let us try this. If you're in class yesterday and you understood cessation, do new rule and tell me the year of assessment and basis period for this company that has ceased business. New rule, please. I know the old rule was a bit confusing. New rule. What is the year of assessment and the basis period of this company, Oleku Nigeria Limited? If you get it, chat, I'll give you like 1,000 clap.
Hey!
1,000 clap. No 1,000 naira.
Abio clap.
I don't have money.
Hello, ma.
I don't have money.
Hello,
Yeah.
ma. The year of assessment is 2021.
Okay, what about the basis period?
Basic period, okay, was incorporated in the cease operation on March. No.
You said the year of assessment is what?
2021.
2021. What is now the basis period?
Basic period now be from 1st of April 2019 to 31st of March 2020.
Okay. So
I can't say yeah.
Who spoke? Is it Wilfred? Wilfred, are you the one that just finished speaking?
No, it's Adeoti Ibrahim.
No,
Okay,
man,
Ibrahim
Sammy.
Adeoti. All right. Sorry, I did not check the person's name, so I did not know who was speaking. Ibrahim Adeoti, thank you for trying. So if you think Ibrahim is right in the chat box, so that I can know your faces. In the chat box. Precious, well done. Oh. In the chat box, you can just give me a thumbs up emoji. If you think Ibrahim is right, give me a thumbs up emoji. If you think Ibrahim is not right, say your own or you type it in the comment section. Oh yeah, fast. Ibrahim, let us see those that follow you and those that do not follow you. Your friend and your enemy. Lawal Adebayo, what is 2020? I don't understand your message. Oh. What is 2020? What are you trying to say? And nobody is saying anything. You guys don't want to follow Ibrahim and you're not talking. Are you for Ibrahim? Abi you are against him? You guys don't want to talk. Lawa, which one are you for? Abi you are against? But now you are thinking. Ní aago mélòó? I don't understand you guys that you are doing thumbs down. I say you should do thumbs up if you follow. This thumbs down does not follow any rule. Because we are going out of instruction. Year of assessment 2020. Okay, what about your basis period? What is your basis period? Your basis period, please. Year of assessment 2021. That means you are following Ibrahim Odunlami.
Ma, please, can
you
go to the question, please, ma?
Okay. Here it is.
Year of assessment is 2020.
What is your basis period? If your year of assessment is 2020, what is your basis period?
I think the basis period should be
Odunlami.
from 1st of January to 31st of March, the date of the cessation.
Date of the cessation. So David and Odunlami Aziz has said the same thing, and actually they are correct. But your year of assessment is not 2021. Odunlami, you got the basis period, but you missed the year of assessment. I don't know whether to give you maybe no. I promise 1,000 class. Maybe you collect 500 class. Maybe you collect 500 class. I'll dash Lawa got the year of assessment. He refused to drop basis period. But you got basis period, you missed year of assessment. So now, the rule for cessation says that from the beginning of the accounting period to the date of cessation, it's like opposite of commencement. From the beginning of the accounting period, no, they said in the question, it says that the accounting year end of the company is what? December 31st annually. They have simplified it for you. It means that if they end December every year, they start when? January every year. So from the beginning is January to the end that you just cannot tax a company that is not working. So the moment they stop working, the tax has stopped at that particular date. So from January to what? To March 31st, 2020, which is what this guy has written, Odunlami Aziz, and the same thing as, I can't remember the name of the person that supported him. But the year of assessment now is not 2021. For cessation, a particular law guides the year of assessment, and it says that you need to count 6 months after the date of cessation, because these people have to pay the tax on that money within 6 months. If the 6 months fall in that year, then that particular year is the year of assessment. But if it should fall in the next year, then the next year will be the year of assessment. So now, the simple rule is just that you divide the year into 2. From January to June, if the business should cease from January to June, then the person will pay the tax in that year. That year becomes the year of assessment. But if it's from July to December, it means your 6 months will never fall in that same year. It will fall in the next year. Then the person will pay tax for the next year. I don't know if we are good. So in this situation now, the company sees March. It's still between the first 6 months of business. So definitely, the year of assessment is 2020 and not 2021. Wilfred, your hand is up.
Yes. Well done, ma. My question is that going with this rule that the in cessation you must count 6 months after the cessation before you assess the company. So what will happen if the basis of cessation, that maybe what makes the company to cease operation is not official, like they are just trying to like japa or shut down the business and run away or go like something like that. Maybe at that movement of cessation or at that moment of shutting down the operation of the business, they are trying to maybe the tax, the revenue is at stake at that movement. So what will the tax authority will now do in that situation? Are they still going to wait till after the 6 months before they will now come to tax the business, of which they might not see anybody at that particular point?
Okay, thank you for your question. Your question shows that you are quite interested in taxation. So there is something called tax audit and investigation. You do that in advanced tax. But before we even get to tax audit and investigation, we have the type of assessment. In the first class, I remember I told you guys to read chapter 1 and 2. We discussed this. Nobody even reminded me. I forgot and nobody reminded me. I think it's either in the first 5 chapters. I cannot remember which chapter exactly. Please, you guys need to be reading this chapter so we can be discussing this. If I had discussed, I don't think you would have had that question now. So people do what is called self-assessment. It means that you are the one assessing yourself to tax. You compute this tax computation by yourself. If you cannot do it, that is why we have accounting firms, audit firms that will help you to compute your tax. I work in an audit firm currently, so it's one of the things that we do. In case you have somebody that wants to do it, we'll do it for you. It's not for free, we collect money, but then that's our work. Do you get? So we'll compose it for you and tell you that your tax for this year of assessment is what is this particular amount. Do you get? So it's not like it's the tax authority that will come and say, give me your books, I want to take it. And this, no. You are the one that you compute the tax that you pay. It's called self-assessment. You file by yourself and you will pay your taxes by yourself. Now, during some period, the tax authority will not start going around and say, because when you submit your self-assessment, you do all of these things in advanced tax. There's something that they do. We have Dex audit and we have field audit. It's other tax audit and tax investigation. Dex audit is when you now submit your file to the tax authority. What would they now do? They will not check that file. They'll check this person that see the revenue, see the profit. Would that go make sense? They will accept it. Yakub, can you please mute your mic? Yakub, mute your mic. Thank you. Okay, so they will not check your figures. They'll check your account. And if it makes sense, like, okay, your revenue to your profits makes sense, they are going to like, okay, they are going to like, okay, accept your tax, no query, nothing. But if they see your revenue 5 million, your profit 500,000, expenses, that's when tax audit will now come. They say they want to come and audit your tax. They will come to your company, check your account, do everything by yourself. And then if you have lied about your tax, they pick you. Well, now for this business, the business have closed, right? Or the jackpot. Until 6 months that you're supposed to pay your tax, the tax authority has no issue running after you. The deadline is 6 months. After 6 months, if you did not pay your tax, that is when they will not penalize you. And I think the penalty for not paying tax is you are going to pay plus the tax that you're supposed to pay. You add additional 10% of that tax plus interest as at the existing bank rate. 10%, you're trying to 10%, then they will not add interest on that money as at the existing bank rate from that time that you not pay till the time that you will pay. So it's inside CIT, we do it in CIT, right? So that is the key. Until you now come and pay, because my dear, if that authority wants to do their job, they will hunt you down. You will pay that money. You will pay the penalty. They will do their. That's when you know that Nigeria can work. They are not as lazy as you think. They will hunt you down. You will pay. Actually, so even if they japa, remember that as a Nigerian, you pay tax on your worldwide income. So if you are a non-Nigerian, you pay tax on the amount of profit that you earn in Nigeria. As long as they can attribute that money to Nigeria, that you earn this money in Nigeria, you are going to pay tax on it. Do you get? So you have another question, Wilfred?
Yes, I'm quite sure. Just that I remember there is another form of assessment which is it a jeopardy assessment also, which that if a tax authority discover that this particular firm or company wants to jackpot or shut down the business, and the revenue of the state or the tax, the liability of the company, the tax liability is going to be like at risk, or they will not get it at that moment. Once they get the information, they will just come and assess you at that moment and take over whatever they want to take. But I quite understand that that is the law, that if the cessation occur, tax authority must wait. The assessment must be after 6 months. So I've gotten it. Thank you so much.
Yeah, so you have the opportunity to pay. It's not compulsory after 6 months. Like is it that before? Like
Oh,
is that on or before? That's the word. On or
okay.
before 6 months. After six
Yeah.
months, then you start incurring penalty, and the tax authority have the right to start like looking for you and nothing that. Then I think the assessment you're talking about is judgmental, if I can remember quite well. Judgmental assessment. I'm not really sure. And that
Yeah,
one
I think that other one is best of judgment. That is best of judgment. Yes, best of judgment is the assessment that tax authority carry out by themselves.
that base
When
of
the tax
judgment is
approve.
what that authority will do for you if they come for tax audit and they realize that you've lied about your income. Then they will not compute by themselves and tell you that you must pay this money. That is when they now use their own
Yes.
basis.
Okay. Thank you.
Do you get the difference now? So basis of judgment is not favorable to a business owner because tax authority will always start you big money. So Kukuma, do it by yourself. Do it by yourself and be truthful about it. It's better than them coming and they will penalize you, you spend money. If those that come to do tax audit, you still buy them mineral and meat pie, another expensive. Well, so you have led us to divert our attention now. We fed you and your curiosity. But then it's good. I like questions like that, actually. I like questions like that.
Sorry, man.
Okay. So Blessing, I should come again on what? Which one? Is it the cessation? Shut up.
Yes, ma'am. Like you mentioned that you were trying to explain how we can get data cessation and all of that. So I didn't really grab
Okay, let me go
all.
back to the
Yes,
question.
thank you, ma'am.
That's mentioned. Okay. So what we are saying is, sorry, give me just 1 minute. Let me. All right. So I was explaining the question. Now let's look at the question. Date of beginning of the accounting year to the date of cessation. That is what the basis period is about. So automatically, Oleku Nigeria Limited. Let me write this here. So let's put it here. Cessation. Cessation of a business. Okay. Let's do our workings here. So we have accounting year equals to what? I don't want it to, well, we do like that. January to December every year. Cessation date March 2020. What is it? 2020? Yeah. So now let's go back. Let me copy this. Good. So first, you write your base period in cessation. Write your base period first because it's your basic period will dictate what your year of assessment would be. So the basic period rule says from the beginning of the accounting year to the date of cessation. When did the accounting year begin? 4th of January 2020 to what day did they cease? 30 March 2020. And I don't think we have any profit in this one. So now, if you now go back to the year of assessment, from January to what? June, any period from January to June, the year of assessment will be the same year that they cease business, because you can still pay that, like your deadline for paying tax is still that year. But from July to December, if you cease between July to December, your deadline for paying the tax will become next year. Then you automatically, your year of assessment will become the next year. So now for this year, we cease business in March, so you can still pay. The deadline for paying that money, for paying your CIT on this business, is going to be what? 6 months after March will be, let me see, April, May, June, July, August. So you still pay that what? That year. So your year of assessment is what? 2020, not 2021. But if I should copy this, let's come downwards and paste it here. Now, if this period was not March, if this period was August, if the company has ceased August, then this year of assessment will not be 2020. Why? The company has September, October, November, December, January, till January to pay their tax, which means by December, your tax authority cannot come and be knocking on my door and say, pay your tax. I still have 1 month left to pay my tax. So you cannot just do that to me, okay? So our year is not going to be 2021. Please, are we good? Are we
Yes.
good? All right.
Yes, ma. Yes, ma.
Okay. Thank you very much. And we have come to the end of ways of assessment. So, Mustafa, please, I've given you the assignment to help us look for more questions. I want us to treat more questions on this, because this is that's why it's called basis. It's the base of taxation. If you don't get the base of assessment, tax is going to be a bit, not so simple for you. So now we are moving to the topic of today. Cheripo Yawa, we're almost at the end of the class. What we'll do is, at least we'll talk about it. Maybe we'll do calculation next class, but at least let us start it, okay? Give me a couple of minutes, please.
Ma, please, let's see the last page.
Please, the Excel sheet, ma. The workings. Thank you.
All right, Lawal Adebayo. Sorry, I had a call as well. Lawal Adebayo, he said if the accounting year is October to September every year, what will be the basis period? I should scroll up a bit. So now, October, let me answer this guy's question. So let me copy this. So we are, sorry, Control C. We are saying that, let me use this. Okay. Okay, let me copy this too. Put it here. Okay. So we are saying that this one is October to September, if I get you right. October to September every year. October to September every year. Take this one. So October to September, and they cease March 20. It means that from October, this one will be from, this one is going to be March 03. And this one will start when? What is October? Is it 10? I think October is 10. It's as simple as that. And they finish, this one will be October 2019. It's not going to be 2020 again. 2019. And this year of assessment is going to be what? 2020. Are we good? So the person that said I should scroll up. Here it is. Please, are we good? We are moving to capital allowance.
Fire on, man.
Good evening. All right, Lawal, you are welcome. So let's move. We are through with our module 1 is on the drive. You can, if you are paid, you are going to have access to module 1. Now let's move to module 2. So you guys said the class is supposed to end by 6:30, Abi. Let's
Yes,
please extend to like 7. Let's do till 7.
That's class like
You have another class.
8:30. FM
FM by what time?
30.
6:30.
8:30.
8:30. You have another class by 8:30.
Yes, ma'am.
And you say I have 1.5 hours to prepare now.
Relax, please. Prepare.
You want to relax?
That's now. Yes, and be careful.
And you still have 1.5 hours to relax now.
Oh, yeah, let's go.
Okay,
Go, let's go. Thank you.
So now, capital allowance. So let me first read and we'll explain. Capital allowance provides tax relief for qualifying capital expenditure incurred by a company for property, plant, and equipment, that's PPE, used in its trade or business. They replace depreciation, which is disallowed for tax purposes. Small companies can't claim capital allowance. Now, these 3 sentences summarize quite a lot. So now let me try to say it in layman terms. Everybody knows depreciation, right? What is depreciation? Can somebody tell me what depreciation is? What is depreciation?
Depreciation, reduction in an economic value of a potential asset due to wear and tear, passage of time, obsolescence, inadequacy, etc., etc.
Thank you very much, Usman. Yes, you are right. Fumi, what are you saying?
Okay, I'm defining depreciation for you.
Okay.
Yeah. So I said it's a systematic allocation of depreciable amount of assets over its estimated useful life.
That's also correct. Thank you very much. So now the main purpose of depreciation is like we are trying to keep money aside for assets that we have that we use for our business. We are keeping money aside for those assets so that by the time we believe that the asset is no longer useful, we would have enough in our purse to do what? To buy another one. That's my own like understanding of depreciation. So we are like saying after a year, if you bought the asset 500,000, after a year you have used like 50k out of 500,000 of the life of this asset. The next year you have used 100k out of that of the asset. But we have different types of method of calculating depreciation. We have different types. So we have straight line method, we have reducing balance method, some of the year digits, we have different types. So now this depreciation is now taken as a way of reducing our profit for tax purposes. Some company will intentionally adopt the use of some of the year digits because some of the year digits will give them a lower net profit. But remember that depreciation is a notional expenses. What do I mean by notional expenses? Money is not going out of the company's pocket. They are only calculating nonsense in their computer and charging it to expenses in the. Did they pay anybody the money? No. Did the money go out of their bank account? No. It is a notional expenses. It's a book expenses. Money that is moving from book to book, but it's not going away from the bank. I don't know if you guys are getting what I'm trying to say. So now, but because the companies have seen this as a way of reducing their net profits, therefore taxable profits, the tax authority now came with another method of countering that particular method, which is called capital allowance. So what they now did is that they now told them that you, these companies, depreciation is not allowed for tax purposes. It means that you cannot deduct depreciation from your profit. So that's one of the things that we're going to do in turning our accounting profits to adjusted profits. If they remove depreciation from their gross profits, we'll help them to add it back. Because we told them that no, depreciation is not an expense that we allow in the tax realm. It's just a way of companies reducing their profits. Number one, they adopt the methods that give them the highest amount of depreciation just to reduce their profits. It's like a way of tax planning, right? So these people now say that we understand that you guys are using your assets and you need to like make provisions for wear and tear in these assets. So just so you not think that we are too wicked, though, let us give you another method that we as tax authority we agree to, and we know that is okay. You are not going to cheat us. Every company will be using the same method. Not that one will be using straight line, another will be using balance, another will be using some of the edits. No, it's one method for everybody, which is now capital allowance. It replaces the depreciation that has been cancelled by the tax authority, right? And there's no two method of preparing capital allowance. All companies use the same method, the same rate to what? Calculate capital allowance. So now, this last sentence that says small companies cannot claim capital allowance is only there because when we get CIT, you understand better. Small companies don't pay CIT. When we get capital company income tax, you know which company falls under the realm of small company. Who are those that we call small company? You will know that when we get there. But just put it in mind that as long as you don't pay tax, why should they give you capital allowance? Why? Well, you're not paying any money. So what are you claiming capital allowance for? That's just what that last sentence is trying to say. So I hope we get the concept of capital allowance. Are we okay with the concept? Do we understand? Thank you, Fumi. All right, George, thank you. Bless you, thank you. So, Usman, thank you. Now let's move the types of capital allowance. We have initial allowance. So this is granted in the first year of acquisition on the cost of purchase of the assets, whether you have purchased new or second hand, but for second hand, exception is building. Initial allowance is granted in full, regardless of the number of months in the base period of the relevant year, relevant tax year. So the one that I wrote prof guys is not for you guys, it's for advanced taxation people. That's why I wrote prof guys there. So we ignore it for you guys. So initial allowance is like the word initial, the like allowance for beginners. When you just get an asset, you bought an asset, the year that you got it, you are going to be given initial allowance. That's why you calculate initial allowance only in the year of acquisition of the asset, only in that year of acquisition, right? And it is granted in full. You don't prorate initial allowance. If your accounting year is January to December every year, and let's say you commence business, no, don't let me use a commence business. What can I use as an example? But when we get to calculation aspect, we might see something that will give us, because I cannot even think of an example right now. But your basis period is not up to 12 months. You have a basis period that is not up to 12 months, and you now bought a new asset. Even though your basis period is not 12 months, they will give you the full initial allowance. We are not going to prorate it for you. You are not going to remove the number of months that is not there. We are collecting everything, the full initial allowance, right? So that's initial allowance for you. It's on the cost, or if you have second hand too is cost now. Whether it's new, you shall bought it. So it's still cost of the asset, right? So only initial allowance. So that's it for initial allowance. So then we have annual allowance. Annual allowance is annually, like the name connotes, every year. Annually, and is computed on the balance of cost after deducting initial allowance. So it means that whatever you want to calculate annual allowance on is cost minus what? Initial allowance. Annual allowance is computed on a what? Straight line basis. It's computed on a straight line basis. Where the base of assessment is less than 1 year, annual allowance shall be prorated proportionally. Like if the basis period is 8 months, then you are going to what? Do annual allowance for what? 8 months. If annual allowance is 4 months, sorry, if your base period is 4 months, your annual allowance will be prorated for 4 months. So now I've written 3 formulas for annual allowance. These formulas depend on the scenario that you currently have. The scenario that it depends on where you are starting your question from, because let me tell you, this capital allowance is a very important topic. Whether in skills or in professional, you need to know capital allowance. You need to understand the basics of what capital allowance. Whether they give you CIT, though your own place, I think it's only in CIT that you are going to need it. But for professional guys, any question that they give them, they are going to need it. And to make it easy when you write advanced tax, you better understand it now. Right now. So now, first and most common formula of annual allowance is cost minus initial allowance divided by the economic useful life, or cost minus initial allowance multiplied by what? Annual allowance percentage. We are going to get to the percentages. I think it should be after. It's not okay. Here it is. Let me move there first so that you guys will not be confused about percentage. So now see this annual allowance rate. This for initial allowance. This for what? Annual allowance. So if you buy a building, you bought a new building, they'll give you 15% as initial allowance, 10% annually. Industrial, same thing. If you buy plants, 50% initial allowance, 25% annual. Mining expenditure. This one is for professional guys. You guys, you're not doing mining now. It's in advanced tax that you will do mining. So that one has like a particular incentive that makes you get 95% and no annual allowance. It's like they're trying to encourage people to go into mining, right? So plants is 50-25, furniture 25-20, motor vehicle 50-25. What else again? So everything shall like that. Anything that you see 95 nil is just to encourage people to go into that sector. They want to push people so that they say, there's an allowance, there's advantage. That's what they do. So now let me go back to what I was explaining, annual allowance formula. So now, to get your economic useful life, EUL means economic useful life. Just like we have, where do we used to use economic useful life? Say, useful life of an asset. So the useful life is the number of years that we expect the asset to last for. But remember that this rate did not show useful life, but you can calculate your useful life by yourself. All you have to do is 100 divided by the rate. For example, plant is what? 50-25. How many years is a particular plant is expected to last for? 100 divided by 25. That's what? 4 years. I think motor vehicle is no. Furniture and fitting is 25-20. For furniture is expected to last for what? 100 divided by 20%, which is what? 5 years. But if you now say that this economic useful life is causing you issue, is giving you a headache, you don't like it, abandon this formula. Come here. You use this one. So that's what cost minus initial allowance multiplied by annual allowance percentage. You use your 20% straight, 25% straight, 50% straight. Do you get? So you use one of these two. But for this one, this last one is when you have tax written down value. You know that when we are calculating our depreciation in the account, we used to have costs. You less depreciation, then you do what? You get your carrying amount. But in capital allowance, you do your costs. When you now less annual allowance, less initial allowance, what you get is not carrying amount. What you get is your tax written down value. So tax written down value is the taxation word for carrying amount. Do we all get it? So instead of saying carrying amount, you are saying tax written down value. So whenever you see tax written down value, you will know that that asset is not a new asset and has enjoyed capital allowance before. So now, how do you now know the annual allowance? Because in some questions, they will not give you the cost of the asset. They only tell you that they bought the asset at this amount, and this asset has been in existence since this particular period. You really want to say, oh. Sometimes they give you the tax written value straight. They will not give you the cost. They tell you this particular motor vehicle has a tax written value of this particular amount, and it was bought at this particular date. And of course, they'll tell you the date that you want to calculate your tax. So you'll be the one to calculate in your head. Motor vehicle is what? 5025 is 4 years 2 years has passed remain 2 years so your annual allowance is not going to be your tax written down value divided by the remaining economic useful life, which is the remaining 2 years that is yet to expire. Please, are we okay with annual allowance? Does the annual allowance have a number of years for which company can claim the annual allowance? Who determines the number of years? So the number of years is what I'm trying to teach you, because the question will not tell you the number of years. The pack does not have number of years. We are to determine the number of years by ourselves, which is the formula that I give you. Economic useful life equals to 100% over the annual allowance percentage. 100% over the annual allowance percentage. Let me write it in the chat box. The economic useful life of an asset equals to 100% divided by the annual allowance percentage. That is the formula. So now, for example, let's say, for example, motor vehicle has 25% annual allowance rate. Sorry for that. Annual allowance rate. My battery is low. So the economic useful life for motor vehicle equals to 100% divided by 25%, which is equal to what? 4 years. Please, are we good? Do you understand now? What's the name of the person that asked? David, do you understand now? So that's how to calculate the number, because you need to know how to calculate the number of years.
Yes,
So that sometimes that is how they if your capital allowance is wrong, my dear, your tax payable taxable profit that they tell you to calculate can never be correct. If this capital allowance is wrong, that you can never be correct. Any other calculation that you base the capital allowance on, can never be correct. Do you get? So you need to understand this capital allowance of the things. Very important. So basis period first, because we need the knowledge of basis period in capital allowance. By the time we start to do calculation, you will see what I'm saying. Basis period is also in capital allowance, because you need to determine the year of assessment in which the company bought those assets before you can now know which year has this particular annual allowance, which year has this particular initial allowance. We get it. So I think, is annual allowance clear? Can we move to the next type of allowance? We might not even reach 7 p.m. The way my battery is low already, and we'll have to leave very soon. So let me see if I can finish the type of allowance, and then we call it a day. I think this is the last type. Okay, let's finish it. So we'll call it a day. So now the last type, we used to have what is called investment allowance. Let me tell you. Will ICANN give us the table of an allowance? Yes, they will give you. They will give you. They don't expect you to memorize it actually. It's always in the question. In fact, they will give you the, I think, companies CIT rate, CET rate, everything will be there. They write it for you. But please shall know the necessary ones. Motor vehicle, land and building, furniture and fittings. Those are the ones that they usually use, so you know it. But in professional, there are some things that you have to memorize. I don't know why I keep talking about professional. You guys are skilled. I don't know why I keep talking about. Maybe I'm just trying to. I'm trying to ready your mind for professional. I don't know. So, but they will give you. They will give you. So now I was talking about investment allowance. We used to have investment allowance. That's before. I think it was financed at 2019 or is it 2021? I'm not sure. That's like, oh, I think it was not 2019. So it was recently. Is that 2021 or 2023? It's not even 2019. It was after they changed the base periods that one occurred. It's either 2021 or 2023 Finance Act that removed investment allowance. So investment allowance is, I think, if you buy new plants, I think it's based on plants. And also if you invest in places that don't have water, they don't have electricity, they don't have water, electricity, what again, like four. Is it electricity? I cannot remember the third one. So they have some percentages that they will give you as investment allowance for free if you invest in those places. But now it has been scrapped. Everything is no longer there. It's no longer in ICANN Park again. That's why I did not bother to put it. So in case if you see somebody's note, I mean maybe one of your seniors asking about investment allowance, and I say, they not teach us, I not teach you because you don't need it. You don't need it, it has been scrapped. So now let's talk about balancing adjustments. Now, balancing adjustment only comes to place if you sell your assets. If you sell your assets, sometimes a company can be lucky that the asset that they've been using for like 5 years, that the value is just like 20K, they will be able to sell it for like 50,000. So in that case, that company will pay tax on the profit that they made from selling the asset. That's what balancing adjustment is about. It is now divided into two. It arises from the difference between the tax written down value of an asset and the sales proceed of the asset. Because sometimes you will make profit, sometimes you will make loss. If you make profits, government will charge you on the profit, which is the balancing charge. But if you make loss, they will give you allowance, like they will relieve your loss for you, which is balancing what? Allowance. So now note that when I say sales proceed, sometimes sales proceed can be in form of insurance claim. Your goods got burnt, and then you got insurance claim, but the insurance claim that you got is either more or less than the value of the goods or the value of the assets. I mean, they stole your assets and insurance now pay you money. You pay tax. Either you pay tax or you get a relief in form of an allowance on that particular asset. So we have balancing allowance. Balancing allowance arise when the asset sales value is below the tax written down value. That is, when a tax loss is made on sales. So yeah, your tax written down value is 30,000. You now sold the asset 20,000. In this case, balancing allowance is what? 10. It's just the difference between, you just need to minus it. That will be your balancing allowance. It's just sales straight. Your loss straight. You don't need to multiply it by any percentage. Balancing charge occurs when the sales value exceeds the tax written down value. It is treated as taxable income. However, the maximum amount payable should not exceed the total capital allowance claimable on the assets before the disposal of the capital expenditure. Now, let me explain this, because this is also one of the ways that ICANN will cash you in capital allowance. We understand the fact that balancing charge occur when you get profit from the sales of your assets, right? But now, your balancing charge cannot exceed the amount of capital allowance that you have claimed before. Okay, you bought the asset 500,000. When you sold the asset, your tax down value is 250,000, meaning that you have claimed capital allowance of 250,000 before. Abi? Now you now saw one mumu that look at the asset and say, this asset is fine. Maybe he's a boy that don't know what he's doing, and try to buy the asset 600,000. 600,000. Asset that is worth 250,000. Like, how much did you gain like that? You gain 350,000. The government does not have the right to tax you over all the 350,000. You now restrict that 350,000 to the amount of capital allowance that has been claimed, which means your balancing charge that will now rise there is going to be 250,000 and not 350,000, because the total capital allowance that you have claimed on the asset is what? 250,000. Please, are we good? This is where we're going to be stopping. Not to go and pray. I'm also a Muslim. I'll pray too. That's why I say we'll stop here. We'll stop here. Though I think there's still a little bit of time for me here. Maybe your place. Yeah, there's still a little bit of time. Please, are we good? Any question before we call it a day?
But please just go over this balancing
I
charge
think when we
and
start the
allowance
practical
again.
Two people are asking questions at the same time. I had your own blessing. And I did not hear what you were saying.
So I was just saying that when we start making calculation with the particles, then we will understand it more better. But
Yes.
at least for that, for me, I've understood it.
Yes, you are right. So let me go over it again. Then we'll cut the call. So balancing adjustment occurs when you sell your asset. And when you sell your asset, you either make a profit or you make a loss, right? If you make a profit, that's when this balancing charge comes into play. You make a profit, government will tax you on the profit and say that only you cannot enjoy this money. Do you get? So the amount of money that you will now be taxed upon must not exceed the total capital allowance that you have claimed on the asset before. Do you get? Because it's like government is trying to say that, oh, we don't want to like ruin your business. Okay, we have allowed you to take this particular money. So we have how do I explain it? They don't want to pass what they have like giving you before. They gave you capital allowance, then you made a profit that is more than your capital allowance. Okay, let's just tax you on the capital allowance that I have given you before. That's like the basis, right? They're not going past the capital allowance. So if you have a profit that exceeds the capital allowance that I have paid before, just restrict that profit to your capital allowance. But for balancing allowance, it means that you have made a loss on sales. And since it's a loss, it becomes an allowance and not a charge. They're not taxing you on loss now. They're going to relieve you. That's why that particular loss will become the total allowance. You're not adding any percentage, you're not multiplying by any percentage. That particular figure is your allowance or your charge. I hope we are good.
Yes, thank you, ma'am.
Thank you so much. So let me stop recording. I guess this is the end of today's class. That's till next week. You guys